Switzerland has long been synonymous with secretive banking, a reputation built over nearly a century that made it one of the most trusted financial centers in the world. Known for discretion, neutrality, and a stable economy, Swiss banks attracted clients from all over the globe. Although recent reforms have changed some of these practices, the legend of Swiss banking secrecy still remains powerful. The story began with the Swiss banking law of 1934, which made it a criminal offense for bankers to reveal the identities of their clients. This law was largely inspired by the political turmoil in Europe, particularly to protect Jewish refugees and political dissidents from Nazi persecution. As a result, Switzerland became a financial sanctuary, a place where people could shield their money, assets, and identity. In addition to secrecy laws, Switzerland's policy of political neutrality, especially during both world wars, further enhanced its image as a secure place to keep wealth. Its stable currency, the Swiss franc, and strict legal system created an environment of trust and discretion that was unmatched. One of the most iconic features of Swiss banking was the introduction of numbered bank accounts. Instead of using names, clients were identified by numbers, ensuring a high level of anonymity. Wealthy individuals, businesses, and even governments used Swiss banks to deposit funds securely, often to avoid political risk or taxation in their home countries. At its peak, Swiss banks held an estimated 25% of the world's offshore wealth. Elite institutions such as UBS and Credit Suisse became household names, catering to kings, billionaires, celebrities, and even controversial figures. The image of unmarked vaults deep in the Alps and anonymous safety deposit boxes only added to the mystique. With secrecy came scrutiny. Over the decades, allegations arose about Swiss banks helping criminals, dictators, and tax evaders hide illicit money. Things came to a head in 2009 when the United States accused UBS of helping American citizens evade taxes. The result was a multi-billion-dollar settlement and the eventual erosion of absolute secrecy. Following international pressure, Switzerland began to reform its banking laws. Agreements such as FATCA with the US and participation in the OECD's automatic exchange of information forced Swiss banks to begin sharing information with foreign tax authorities. Secrecy, once absolute, had become conditional. Today, Swiss banks still offer privacy, but under strict international compliance rules. Clients must prove the legal origin of their funds, and banks perform due diligence with Know Your Customer and anti-money laundering policies. While anonymous banking has faded, Switzerland remains a top choice for wealth management, investment services, and asset protection. The era of shielding fortunes from taxes has ended, but Switzerland has adapted. Instead of secrecy, it now offers professional discretion, legal protection, and world-class financial services. Though the days of total anonymity are over, Swiss banking secrecy continues to fascinate. Its history reflects not only financial innovation, but also the tension between privacy and transparency. Today, Switzerland balances its legacy with modern financial ethics, still standing tall as a global banking giant, but now in a world where discretion meets accountability.